Vaibhav. I welcome all of you to today's session of Visual Jforex, in which I will be demonstrating to you on simple algorithm development using the linear regression angle. In the earlier session of the introductory series, I had explained the functional aspects of linear regression angle. So, in this session, I won't really be going into the details of how it is made up, but rather than that, we will be working mostly on its utility in the real-time environment. Let's get started for today's session. This platform has been developed by the Dukascopy Bank SA so that we don't really have to monitor the market day in day out. Rather than that, we can sit back and see the action unfold. This indicator is included under the mathematical components, and you will find it listed just below the linear regression. First, we will have to do the instrument subscription. For the instrument subscription, I will add a couple of if-else statements, logical blocks, and here the first input will be the default variable named default instrument, and as we are working with the start point on candle, I will take the last ask candle, or you can use both of these options, any of it will do. So here last ask candle, candle instrument, and in a second, uh, here also we will have to make sure that the instrument is same in both of these conditions. And for today's session, we will work with the Euro USD. Here Euro USD, I will have to look for it. Yes. It's a difficult job, though we okay. One more time. Got this finally, and thankfully, okay, the list and the position amount also needs to be defined to 0. I will color code this so that we know that iteration flow is passing smoothly. In case any hiccup arises, we will know immediately. Now again we will have to retrieve the position amount data, position info, all position amount 0. Both the pending open orders and the market positions both will be considered, and only when there is no other trade open on the account, only then the new execution will happen. Okay, this algorithm we will define it on the hourly time frame. Here I will change the instrument. So this is the chart of Euro USD on the hourly time frame, and let me change this as well. Time period will be hourly and shift. As most of the time we work with the chart patterns after it gets well established. So because of that, instead of taking the shift 0, I mostly prefer to keep it at 1 so that last hourly candle has closed, and whatever formation is there till that candle will be taken into consideration. So that's why again here I will changing the shift to 1. Okay, I think it hasn't worked. All right, now on the chart, so here the logic behind today's algorithm is going to be this formation of angle. Whenever we see the reversal happening from one side to another, we will go for the initiation of the fresh trade. So here when the linear regression angle starts to decline after having reason, we go for the short sell trade, and vice versa. When we see that linear regression angle is now turning on the higher side after having been in decline, we look for the buy trades. And as you can observe on the chart, it's not like a sure short method. It will also result in some false trades, some successful trades, and we have to optimize the algorithm so that we are in good position to reap benefits, and also we have to minimize the losses to the extent possible. So we will have to work with that. And also we can take into consideration the underlying volatility. If it is more than usual or it is just as per the norms, we can use that as well to our advantage, and see if there is enough of buying momentum or selling momentum in the direction of the trade we are trying to take. So here, as I said, the idea is going to be simple, and for that I will be utilizing the linear regression angle blocks, and I think three should be good enough. The, one will be the linear regression block with shift value of 1, and we will compare it to say 3 hours back, and if now the linear regression value is higher compared to the prior value, the value of 3 hours back, and at the same time the linear regression angle value 3 hours back should be less than the value linear regression angle 5 hours back. So here we will have the clear cut formation where we see that earlier the linear regression angle value was going down, it was in the decline, and then after the price momentum shifted after the reversal on the in the trend, we are seeing change of direction for the underlying instrument, and this might be the right time to get involved. And this won't be the case always, but still, I think this indicator will give you good enough idea to stay on the profitable side. And similarly, for the sale side also, here we will compare the linear regression angle value, and the last hourly linear regression angle value should be lower than the value 3 hours back, and the value 3 hours back should be higher compared to the linear regression angle value 5 hours back. So we will have the clearly defined condition for this, and as I said, we can also add other components to make sure that enough of volatility is there, and that is also a possibility. And for that, if we simply retrieve the historical candle data, then that should be good enough. So let's get started for the day. And we now head back to the Visual Jforex platform. Okay, and here I will add the indicator block, not blocked, sorry. And here is this another indicator block of linear regression angle, and this time I will change the time period to hourly. And shift has been defined at 3, and one more will be with the shift value of 5. And to pinpoint the entry and exit points, I will also have to add the historical candles. And as I said, we also have to look at the volatility prevalent. So I will also take the multiple historical candles, and for that, to retrieve the info, this second block of get historical candles, in which we will have multiple hourly candles. We can define the number of candles which we will be taking into consideration. And here I think for this algorithm session, the candle amount of 3 should be good enough. So I will make changes and make it 3. Okay. Shift is here I will keep the shift 0 only. So even current hourly candle will be included, and then prior to candles. So taken together, 3 historical candles. Price action data we will be able to use. This is the array of data, and we will have to rely on the loop viewer to retrieve the data. So I will add the loop viewer as well. Components, logical. Okay. And this array of data will go there, and we will have the name, I think 3 hourly candle TLC should be good enough. And then we will be able to access the characteristics, individual characteristics on these cluster of candles from simply looking at these values. All right, now I will also add two more historical candles of 10 seconds each, and for that I will have to take these two blocks and also one hourly I will include, so that we have a properly defined entry point for the algorithm. We will continue with the loop. Ten seconds. This is also going to be of 10 seconds, and this one I will change it to hourly. Shift 1, shift 2, and this again shift 1, but on the hourly time frame. Okay, so this looks good to me. And so far we have added these indicator blocks, and for the session I think we will have to stop here as we are running out of time, and tomorrow we will pick it up from where we are leaving now. So thank you all for joining in. Stay tuned for the further development of this algorithm, and also do subscribe to the Dukascopy webinar channel to stay updated on the market developments. Thank you all. Goodbye.